Hello, traders. It's 8:02 a.m. Chicago time on Thursday, the 19th of March, 2020. Thanks for joining me yet again in this great saga of a market. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1716. Incredible how many episodes there are. So this morning, the overall market sentiment is really mixed. The overnight session shows, the extended hour session shows that the market, the S&P, has actually come within 6 ticks of a limit down on the 5% Globex limit. I think it's at 2273 and a half. I did post the limits. I did post the limits on my Twitter feed. You can find those at twitter.com/futures trader 71. You do not have to have a Twitter account to be able to read the feed, I believe. Um, in any case, crude is taking a pop. Crude absolutely took a punch to the jaw yesterday, pretty badly at its lowest point. Crude was off by $6.68 from the prior day's close, recovered a little bit and finished down $4.31. Quite a big drop to crude, having tested the $20 handle yesterday. The market is responding a little bit to the fact that the president of the U.S. has signed the coronavirus relief bill. This has got to go down in history as the first bill in probably 12 years that has gone from the House through the Senate, largely untouched, to the president's desk while two parties worked on it. So at least it's nice to see that we can come together as a country when it's needed. Mnuchin was just, the Secretary of the Treasury, Mnuchin, was just speaking about the fact that he was looking to ask for more money to fill up the Strategic Petroleum Reserve at current prices. In the meantime, some senators, Republican senators, want to punish Saudi Arabia for this price war, although it's to the benefit of the country, of course, and the globe for oil to be this low, not to the benefit of the nature, of course, but um, that's where we stand with crude. So crude took a pop, trading at 22.52, up $1.69 or 8.11%. 8.11%. The bonds are up insane this morning, up 4 handles and 27 ticks on the futures. In prices, that represents 2.88%. That is not the yield. That is quite a bit for the long end of the curve. Quite incredible, these moves that are occurring in the financial system here. Gold is again below 1,500, trading at 1479.80, up $1.90 this morning. And then everything else is down, with the S&P down the most, uh, trading at the 2366 and a quarter in the June contract. Hopefully you're trading June, down 34 points and a quarter, or 1.43%. The DAX is down 107, trading in the 8,300 handle. So, the overnight session, just to put things in perspective a little bit, something I put in the Head Trader channel at Convergent Trading. The overnight session, compared to yesterday's closing price, the overnight session had a 7.7% swing. Remember, the entire range, lock limit up or down, is 10%, 5% down, 5% up. This morning we had a 7.7% swing. As I said, we were 6 ticks or so from lock limit down on the low, and we bounced up a couple times from there. So there's a lot to take in. Currently, a lot to process. There are moves by the Swiss National Bank and others. And Canada is also making a lot of moves. Canada has stopped all flights across the border, has shut down its borders completely. First, they shut them down to everybody but U.S. citizens and Canadian citizens and landed immigrants, and some U.S. citizens. And now they've shut them down absolutely and completely as each country works to isolate itself to protect its interests against this virus. So it's quite a crazy environment. German IFO came in very low today, collapsed to 87.7, 87.7 March preliminary versus the mid 90s expected. So again, and JP Morgan came in saying that the GDP would absolutely take a hit for the second and third quarters and potentially bounce back in the fourth. So that's what the market is pricing in. Let's take a look at what's on the calendar. Today, pretty much everything is behind us. We've gone through initial claims. Initial claims, by the way, for last week, 281,000, the highest initial claims in about 2 years. The expectation was 219. The higher the number, the worse that it is. Philly Fed came out at negative 12.7. The expectation was positive 15. Positive 15. And China announces its loan prime rate this evening, expected at 3.95%. That's at 9:30 Eastern. That's what's on schedule. Let's take a look. I'm going to hop right into order flow here. Not sure why it does this, but let's move this over. Every once in a while, this system at home decides to just shuffle these monitors around. Here, let's take a look at this. Oh, there we go. So this is just this is CT Bookmap. By the way, just so everybody knows, I'm going to be talking on in Bookmap's Pro Trader series. It happens about twice a year. Today at 11 Central, 12 Eastern. It's open to everybody. The link is right there at the bottom. I'll post it in the YouTube live chat. You'll also find it on my Twitter feed, twitter.com/futurestrader71. I'll be talking about looking at order flow and volatile markets, setting up trades, hopefully in real time. If the webinar software actually works, the webinar we use GoToWebinar. I tried to use GoToWebinar yesterday, and because of the number of people working from home, it's getting absolutely bombarded. Their servers are, and it did not work at all. So assuming it works well, I'll be speaking live about order flow this morning and looking at this software here, Bookmap, which is what I use to look at order flow and for execution. Here's what the order flow looked like last night. We reopen, we push higher, and well, hang on. It's taking a while to load. It's stressed. Here we go. We reopen, we push higher, we push right into the liquidity that was left over from yesterday, 2460. That liquidity was there throughout yesterday's session, and it rolls right over, and it immediately tumbles down into the other side and pushes to the extreme other side. The liquidity also stable on the way down. Notice that red band. This is what I'll be discussing today. Notice that red band of liquidity right here was there before the price came to it. This is an important indication that this is likely to trade out, and we don't know whether it'll hold or not. Because it just depends on the force that's hitting it. But until it comes down here, we expect that the market is likely to bounce. And it bounced a little bit, tested near the lows, and then from there pushed up, came back, and we are trading in the center right now. We're basically trading in bounce. You could see the volume profile here. We're holding steady against the high volume area, and you can also see where the liquidity lies in the book. Of course, not having limit down is nice because we can actually see what is out there, what orders are out there, and that's where it is. Beneath where we stopped today, um, beneath where we hit the 2275 low, we have 2260, 2250 are well bid and well bid for some time. And above here, 2460 remains well offered. 2500 is well offered, and then above there, 2550 and 2575. I know that sounds like a great big distance away, but it's not actually. So it's, the market's covering 200 points of range without a problem. So yesterday, what did we do? Well, I did not pull up the chart with what was expected. Let me pull that up. The prep sessions these days are quite insanely busy. So by the time I launched the video, even though I'd been at my desk for an hour and a half, it's still not enough to look at everything I need to look at. So here's what was expected yesterday. Just one second. Uh, well, actually, I didn't draw anything on here. I thought I pointed out some key levels. I did not draw anything on here, so there's nothing to show. Let's take a look at what it actually did. Yesterday, it opened on the limit. Uh, Open on the limit, was responsive, pushed back up to 24.42. The expectation is resistance in this area right here from the prior session. So it pushed through by about 10 points. And then it rolled right over, fell below the mid, pulled back, retested the mid, and then we have basically an impulse pullback. The continuation was expected. I narrated this in the yesterday's trade talk, and it ended up creating an additional impulsive move down and pushing to 2262, which is quite a ways. I thought I pointed out yesterday somewhere in this video from yesterday that 2280 is a key target below. This is a high volume node on the composite. And the expectation is that we would likely, if we get down into this area, we're likely to see a response. This is the normal behavior for an auction on a first test of a high volume node. And that's what we essentially saw. It did push through by 18 points, but I want to remind you that 18 points is about one rotation on a 1 minute chart currently. I mean, basically stops, a reasonable stop right now is really somewhere around 12 points in the ES, believe it or not. But this is the kind of numbers we're dealing with. And then it pulls back and immediately explodes to the upside on the close and pushes to close around the 2400 figure. We're currently trading 2376. To me, yesterday, this was a clear poke below that big low we put in a couple days ago on Monday. It poked below. It found buyers beneath here. It leaned against the high volume node, and now it's back in the range. The buyers have a pretty good opportunity today to hold these prices, to hold this 2343 area and or 2345 area, and to squeeze back up. That I expect that 2350 would be a pretty decent fight this morning, and then I'm looking for it to rotate back up, get back above 2400 and start testing 2430, 2440, and 2460 up here. Actually, tested 2460 overnight and to start working its way up. This is the way the market is configured today. We've had a selling day. We generally have a buying day the following day, these last few sessions. and the market is configured in such a way that it may be able to pull that off today. A lot of good news for the markets. There's a lot of flow of money, a lot of flow of money coming in, a lot of support, and that's that's what we currently, these are pretty much, relatively speaking, these are bargain shopper prices from the all-time high. I think we're off about 36% on the low yesterday, something like that, 35, 36%. That's quite a bit, considering that the entire 2008 correction, or what is it, the Great Recession as they call it, whatever you want to call it, that whole thing was about 42% from the peak. So we're really at what would be relatively bargain basement prices. Here's the overnight session. Here's the overnight session. We're forming a bit of a triangle here in the overnight, testing back and forth. And I expect that as it approaches the apex, my expectation is for it to break to the upside and start moving towards 2460, which, by the way, has a very weak high. If you look at 2460 overnight, there was quite a bit of trading. There's quite a bit of buying and selling at that price. Let me clear my voice. Quite a bit of buying and selling at that price. And then above there, I'm looking for it to test this 2490 area and then start to breach into 2500. That is the more likely scenario, but who am I kidding here? This is anybody's guess. Flip a coin, really. This is the type of market we're in. Volatility is at historical highs, and likely to pull back. A little bit, which would bode well for buying back of some of these shorts. So I don't want to color to your bias too much. Of course, trade your plan, trade whatever bias you have. But to me, it looks like the conditions are somewhat set up for a push higher. Here's the big picture. This is the big picture profile here, and we have taken out and poked through this old low at 43 and a quarter. We're trading at 74 even. We've poked through, and this looks to me like it's an excess low beneath here, and we're likely to see a pullback from there. Who knows? Who knows what's likely to happen? I don't think the true extent of this disaster with COVID-19 is fully priced. Eric Townsend, I think, was on point from way back in January, calling out for this kind of a disastrous type of response to this virus. So I don't think we're fully, we're nowhere near our peak. We're just starting out here in the U.S. We're just finally taking measures to curb the occurrence of infection among the U.S. Population, and so we're likely to see this homebound work environment and lower productivity overall for the economy. We're bound to see it go longer than most people expect. Staying at home for a week or shutting down your business for a week isn't going to do much for this virus. And this virus doesn't care what industry you're in, what race you are, what social status you have. It treats everybody equally. So I don't think we're there yet. Okay, I wanted to spend just a moment on crude. So I was doing my stock zones in crude here. This thing is just, man, it's brutal. Crude was in the $60, $65 handle not but a month ago. And here yesterday it hit 22.50 in the May contract. It is resting this morning. You could see that the action so far is such that it is taking a break. It is taking a break from what happened yesterday. Yesterday was an impulse down But what I noticed yesterday also is that it impulsed down with no um, with which sets us up for a potential continuation. It's coming from balance. If we look up here, we can see that we gapped down on that Russian news, and we've been balancing for quite some time. We've been balancing this whole time here until yesterday, and that balance broke to the downside with an impulse. I'm expecting, unless there's some intervention or something happens between Russia and Saudi Arabia, this looks like a pullback for a continuation lower. I'm looking for crude to actually continue to push lower if left to its own devices. The way the auction is operating currently, it's really showing that this product is quite weak. In terms of what's expected today, again, I want to remind you that I'll be talking on Bookmap at 11 Central, 12 Eastern. Please join that. For today, really, I'm going to keep these stock zone areas on. And wow, I've gone way over my time. This morning, I'm expecting an open that tests down into this 43-ish area, and then I'm looking for a push higher towards 2400. I'm looking for it to take the 2400 and start working itself towards the overnight high 2460. That's my main scenario for today. Obviously, I'm not going to be married to any particular bias, but overall, I'm expecting the market to pick up. We're opening up against the overnight point of control, against yesterday's point of control. The market is in balance in the S&Ps despite the low it put in this morning, but I'm looking for it to test higher. On the secondary, I'm looking for an open that immediately pushes up, consolidates, pulls back down, and then holds steady sideways as more information is digested. The third scenario is obviously an open test up into 2400, probably by a bit, and then rotating down and retesting that 2280 area once again. Anyway, I'll leave you with those. Those are kind of pie in the sky scenarios, but it's something to go off of. Good luck today. I'll catch you at the Bookmap webinar. Take care.